Hey everyone, welcome back to the TraderLion channel. This is Richard here with Ross Haber, and today we're continuing on with our chart of the week series, going through the overall market, the Nasdaq Composite, since there's not really any individual stocks that we really have our eye on this week. And overall, we'll go through the market analysis, give a little bit of additional commentary from Ross, and if you're interested on even more depth, go ahead and check out the top 10 report, which will be linked down below in the description. With that said, let's go over to you, Ross, and just give us a take, give us your take on the overall market conditions.
Thanks, Richard. So we're looking at the NASDAQ Composite here, like you said, on MarketSmith, and we're going to keep it short and sweet. Very little has changed since last week, where we sold off, ultimately undercut and rallied. It was last week that we technically ended the prior rally attempt. So we spent Monday through Thursday of last week stuck under, just trying hard, struggling below major resistance here to ultimately roll over on Friday, pick up volume, close near the lowest of its range. And that's really it. I mean, if you wanted to really get into it, it's been, again, we don't count distribution days because we're in a downtrend. However, this has just been, if you look, the two biggest volume days last week were distributive action, right? We've got a big day of down volume here, and again on Friday it picks up again. So it's just letting you know, institutions, this is a sign that they are still liquidating stocks. And let me point out one more thing, and then I don't want to be all gloom and doom here. And again, this isn't an individual stock, it's just one index compared to the other, but you can see just barely here, relative strength lines making new lows ahead of price. Right. However, I would like to say this: it's extremely negative out there. We've seen war situations, we've seen the Brexit, this, that, and the other, which we would have thought would have a longer lasting negative effect than they did. So I would just say this: continue to maintain your watch list. Let's just take a look back here, just as a scenario. I'm sure we all thought the market, was finished right about here. And I'm not saying the exact same thing will happen, but we might just, have this sort of thing where we move sideways, really just keep, frustrating the heck out of everybody. And before you know it, we could have a follow through day. I'm just saying, be ready for anything. Right. Or, maybe this is the beginning of our second of 3 legs down and we have much further to go. I have no clue. I'm not making any predictions. To me, I'd stay as neutral as possible and just tell myself the likelihood of either scenario is equal. Nobody knows how it's going to happen. So just remember, while we could go down and, significantly further, we could also turn around and surprise everybody when they least expect it, which happens. So that being said, I'm going to flip it over to you, Richard, just get your opinion on what we got going on here.
Sure. So I don't have too much additional to say. We have rallied kind of twice now into the declining 21 EMA area, and we've been rejected downwards both times. So I think what will be constructive action is when we finally get back above those short-term moving averages. Those short-term moving averages flip over to being support, and we kind of see that curl up the right-hand side, like we've actually seen back in this area right here, as well as back here. That's just kind of the overall pattern. And yep, Ross is drawing out that DTL. That's definitely an area of interest as well. And other than that, like Ross said, be ready for any scenario. Be optimistic, stay flexible, keep watching for those overall groups that are shaping up. There's definitely some opportunities if you're a more nimble and short-term trader here on both sides of the market. I think a lot of gold stocks have been recently doing well. So if that's your style, go ahead and take advantage of that. But if you're more of a classic position trader, wait for that fall through day, wait for that confirmation, wait for all those groups coming together so the wind is at your back. So that's pretty much all I would say. But I know from my shorter experience and Ross from his that things can shape up a lot quicker than anybody thinks. So be ready and stay optimistic, because I think this correction is going to set up some monster moves in stocks. I mean, we saw that from the March 2020 correction, the 2018 correction as well. We saw some great runs at true market leaders. So be ready, stay on the lookout, and keep those watches up to date, because that homework will pay off once the overall market resumes the uptrend. So yeah, that's pretty much all I have to say. Ross, any final remarks or words of wisdom that you got?
Just well, nothing more than what I tell you guys all the time. Don't worry about, don't worry about missing. Don't worry about when the market's going to bottom. You're not going to miss it. And do yourselves a favor and think about all the good things that haven't happened that are going to happen.
Yeah. Yeah.
Think about all the good things that are going to happen that haven't happened yet. It's much better for you than worrying.
Absolutely.
Worrying is praying for bad things to happen. That's what I'd say.
Perfect. So we'll go ahead and leave it there. Keep it short and sweet. If you enjoyed the video, please go ahead and leave a like down below and let us know your thoughts down below in the comment section. We'd love to hear your take on the market, and we'll see you guys next week. Thanks.